Hello and welcome to Blythe Way Business News. Today I'm joined by David Minchin, who's Chief Executive of Helium One. Helium One's a new arrival on the stock market. It listed on the AIM market on the 4th of December. And since it listed, it has had a remarkable rise in its share price. David, welcome to the show. Helium One, helium. I'm not sure too many of our viewers or potential investors will know what helium is. So tell us a little bit about helium, the demand, and what it's used for.
Hi, Tim. Pleasure to join you. So helium is one of the sort of unsung fuels of the modern world. It's used in a range of high-tech applications, from medical uses, superconductors, purging and controlled atmospheres, high-tech welding, high-tech manufacturing. It's a little bit used in lots of different industries, and has a number of unique properties, which means it's completely unsubstitutable and irreplaceable in the applications where it's used. So, for instance, if you want to cool something to within 5 degrees of absolute zero, so that you can take advantage of its superconducting properties, you need to use helium. And the most common use of that would be in MRI scanners, which take up about 20% of the helium demand at the moment, where it's used for cooling magnets. And we're seeing helium demand increasing year on year. For instance, as MRI scanners, which were a high-tech application, are now becoming a standard technology that's part of a diagnostic toolkit used in hospitals around the world. We're seeing China and India looking to rapidly increase the number of MRI scanners which we have available. And that's one of the things of helium. It's the applications where it's being used, they're high-value, high-tech applications, and these applications are increasing in their use and are spreading around the globe.
So, David, as you said, demand is going up, driven by all kinds of scientific and medical applications. Tell us about the supply of helium. Is there an abundance of it, or are we looking at some kind of shortfall?
Well, helium is critically undersupplied at the moment. So the entirety of helium supply comes as a low-grade byproduct of hydrocarbon production. Gas compositions ranging from 0.3%, all the way down to 0.05 are considered to be economic. But these supplies are inflexible, and while demand is increasing, there's been a dramatic drop in the amount of supply on the market with the closure of the Bureau of Land Management, US Federal Reserve. Now, that was a strategic stockpile built up during the Cold War, traditionally providing between 20 to 25% of global demand. And that's been closing down over the last 10 to 15 years. And as of last year, it's closed its doors. So 20 to 25% of global supply has just gone overnight. As a result of that's been massive price increases and critical undersupply, because and the time has come for a new source of primary helium, which isn't related to hydrocarbon production and is able to fill the increasing demand without being connected to multi-billion-dollar capex projects.
Which nicely leads us into Helium One. So demand is going up, supply is disappearing, and all of a sudden along comes Helium One in Tanzania, and you have this wonderful discovery, I think it's the Raqqa Project. Tell us a little bit about Raqqa and what you're hoping, what that entails.
So Raqqa is the largest pure play primary helium project ever discovered. It's got potential globally strategic size, with enough helium contained to change the way that the commodity is provided over the next 100 years. And it's very, very rare, I think, for something like this to come onto the retail market, where people are able to get involved in a project like this at an early stage, which is where we are now. So we have been active in Tanzania for the last 5 years. We took first move advantage to secure all of the areas in Tanzania where there's potential commercial helium discoveries. So helium is sourced from ancient continental crust, where it naturally accumulates over hundreds of millions of years from the breakdown of radioactive isotopes in the crust. It gets released when that crust is broken open for the very, very first time. And that's happening on the East African Rift Valley. And it then gets trapped in sediments above, which have accumulated under the Great Lakes and can occur in very high purities. Now, the three licenses that we've pegged, we've got helium seeps coming up to the surface. So there's thermal springs and little bubbles of helium coming up at 10% helium and 90% nitrogen. Bear in mind, on a hydrocarbon play, grades down to 0.05% helium are economic. So this is mind-blowing in terms of grade. And we've secured 4,500 square kilometers that picks up all of those areas where there is helium seeping at surface next to sedimentary traps. We've got reprocessed seismic data, over 1,000 kilometers of seismic data. We've run high resolution gravity survey. We've done macro seep analysis, micro seep analysis. And we have a independently verified, unrisked prospective helium resource of 138 billion cubic feet of helium.
So let me just be clear on this, David. Are you saying you've got enough helium to supply the increasing world demand for 100 years?
Yeah, I'd say. So helium demand at the moment is 6 billion cubic feet a year. We've got 138 billion cubic feet as our P50 best estimate resource. It could be larger, it could be smaller.
Truly phenomenal. But now, so you've found this, you've got it, you've got the license, it's there. Tell us about the steps and the timescales into production and how much money that's going to cost.
So we've done everything that we can from surface. We've got all the parts of the system have been identified, and we know where we're going to drill. So we've just raised £6 million, and that's sufficient for us to complete all of our exploration work planned for next year. So we're going to kick off the year early in the year, mobilizing an infill seismic campaign. So 150 kilometers of seismic, running over our drill targets, giving us a much higher resolution and giving us every opportunity so that when we drill, we hit the top of the trap and we find the helium gas. We're then looking to do three holes at the end of Q1 stroke beginning of Q2 of next year. We're using a slimline mineral rig because it's a high value gas. We don't need to drill so deep to find a commercial discovery. So we're targeting traps down to about 1,200 meters using a slimline mineral rig. They're cheaper than oil and gas rigs. We don't like wasting money. So the whole thing should cost about $2.5 million to do that drilling. And by midway through next year, we'll have tested those holes and we'll know if we have a discovery or not.
Thank you, David. So for the benefit of viewers and potential investors, what should we be looking out for in the early months of 2021? What's that short-term news flow looking like?
So there's a very busy schedule. We'll be mobilizing seismic at the beginning of the year, running that throughout February, processing the results through March, have a rig on the ground, say April time, and be drilling throughout April, May, June, and into July, publishing results of any helium shows which we find as we drill, and any drill string tests on completion of the holes.
Thank you, David. That was David Minchin, Chief Executive of Helium One. Helium One is the only helium company currently listed on the London stock market. And as we said at the start of the show, they listed earlier in December. The company trades with a ticker of HE1 and currently has a market capitalization of around £25 million sterling. That's it from Blytheway Business News for today. Thank you for watching.